in 25 years doing this, it's the scariest time that I've ever seen. And the reason that is like these tariffs, in my opinion, could take big tech, the U.S. tech industry back a decade. When you're playing a game of high stakes poker like this, you're playing with the economy. You're playing with ultimately CapEx, large purchases, and understand the rules of the game. So essentially what he single-handedly has done, I think, as administration, they've set off a snowball that's going downhill. And for someone like myself that speak to hundreds of people in terms of buyers and our team, buyers of spending, in terms of what CapEx looks like projects, I think 15 to 20% of projects, CapEx, automatically halted.
All right, welcome to a very special edition of the Risk Reversal Podcast. I'm Dan Nathan. I'm joined by Dan Ives. Only Dan's today. This is Global Head of Technology Research at Wedbush Securities. Dan, welcome back to the podcast.
No, it's great to be here, especially during this time.
You look tired. I mean, let me just tell you, you look tired because every time I look up, you're either on this news broadcast or that news broadcast, and you're actually, kind of breaking things down, I think, to a broader audience than you usually speak to. Obviously, your institutional clients, you come on CNBC, and you're talking to an audience for the most part who kind of, A, they know you, B, they know the stocks that you cover, you know what I mean? And that's a really kind of important thing. It almost probably feels a little comfortable, right, when you're on CNBC. But to go on some of these broader networks and really talk about what's going on, a lot of these folks are looking at you, hearing from you the first time, and they're hearing about, let's say, the inner workings of a sector, technology, that's been really important to the stock market gains over the last 2 years specifically. So let's start. I had a whole rundown here, but this is Thursday afternoon. At one point, the NASDAQ was down 6%. A lot of the names that had rallied really hard on Wednesday are giving a lot of that back. Again, like I said, you look tired. You look great. If you're listening to this, the guy, he looks great, but you look tired. What's going on?
I've probably had,
let's hear it.
Maybe in the last 4 or 5 days, maybe 12, 15 hours combined sleep, the last 4 or 5 days. Because,
what?
Well, because you
gotta take care of yourself, bro.
But in my opinion, in 25 years doing this, it's the scariest time that I've ever seen. And the reason that is as someone like myself, and this is even forget stocks. So it's just because a lot of how I've written over the last week, 20 notes, it's writing more as an American citizen, as a U.S. citizen, really as someone that understands the supply chain, understands the reality of how we produce, the mechanics of big tech. Look, I think it's these tariffs, in my opinion, could take big tech, the U.S. tech industry back a decade. So when I talk, whether it's clients and to retail media, whatever, a lot of it is really breaking down the issues and understanding it's not just about stocks. This is a Category 5 self-inflicted hurricane that's coming to the U.S. consumer.
Okay. So we'll hit some of the macro. We'll obviously hit some of your most favorite names. When I say your most favorite names, I mean all the people listening or watching out there, because again, we've talked about, these top 10 stocks in the market here in the U.S. And, they've driven a disproportionate amount of the stock performance or the stock market performance over the last few years. They've also been a big part of the earnings growth story. And so we're seeing somewhat of a kind of de-risking in that space, which is causing multiples to come down a little bit. So we're going to hit all that, but let's start with the macro here. And you said that this is probably one of the most scary times in the last 25.
Scary, including going through dot-com bubble, financial crisis, COVID date. If I had to compare, for me that's been through it all, it's definitely the scariest.
All right, so one of the things that is less concerning to me this time around than, let's say, the GFC is that there's not a group of stocks or some sort of theme that was driving, the kind of, volatility, driving the lack of confidence in the broader market. This is one on a very macro level. It affects, almost every country in the world, right? But all of a sudden we're looking at a situation where, to your point, I think you just said self-inflicted, right? Wasn't there a way in which a lot of investors or market participants could have looked at this? And I was doing this on Fast Money a lot. Okay, so we have a base case, We have a best case and we have a worst case. And if Trump 1.0 told us anything, it was likely to be threatening the worst case, but ends up at the base case. So speak to that a little bit.
The problem is that, when you're playing a game of high stakes poker like this, you're playing with the economy. You're playing with ultimately CapEx, large purchases, and understand the rules of the game. So essentially what he single-handedly has done, I think as an administration, they've set off a snowball that's going downhill. And for someone like myself that speak to hundreds of people in terms of buyers and our team, buyers of spending, in terms of what CapEx looks like projects, I think 15 to 20% of projects, CapEx, automatically halted. Then you start to look at what else could ultimately be slowed down over. And I just believe we're going into an earnings season, besides just no guidance, street numbers already baking in probably 8 to 10% cuts across the board, whether it's NVIDIA, Microsoft, pick your spot. But my view is like the longer this continues, because of the nature of what you're bringing in and the impact that tariffs have, not even just on a baseline 10%, when you look what's happened in China, 30% of ships ultimately got turned around. So my view, it's not even just in terms of like these stocks and can they recover and go through it. My worry, and I've talked about it over the last week, is that you are fundamentally taking what I believe is probably one of the biggest assets in this country in terms of U.S. tech and basically taking it back many, many years, China ultimately giving them the leap. And that's really...
All right, so that's something, Dan, a lot of folks are not saying right now, right? They think we hold all of the cards. And I think that's a really unique take because I have not heard that much on CNBC. I have not read that in any of the newspapers.
I've written about
social.
And I've written about that constantly.
So you've gone from somebody that I think folks think, and listen, you could be called whatever the fuck you want. I've heard it all. But I'm going to say you were very optimistic.
And I've been bullish for 25 years. I mean, I've been a perma, but there's no one that's more bullish in terms of tech than me.
Yeah.
But like I could call it like I see it. So when as someone that spent my career in Taiwan, in China, in Asia, Vietnam, understand supply chains, the concept that we're actually going to try to bring Apple would take $30 billion, 3 years to take 10%. If you like $3,500 iPhones, we should make them in New Jersey or Illinois. So the reality is that's why. And then guess what? As all this is happening, from NVIDIA to Microsoft, who do you think is ultimately going to benefit? BABA, JD, BYD, Huawei. So the irony is like you're burning your house down yourself, but yet at the same time, it's really China that ultimately holds the cards because where are the raw materials? Where are the chips? And everyone's like, we can make it here. Have you ever been to a fab in Taiwan? Go to a fab for 3 hours and tell me that we could do that here, where you're paying someone $24 to work at, Chipotle or Starbucks. The labor, the nature of our infrastructure here, how long it would take, it doesn't work. So the reason that I've been so negative as someone that's been positive for, decades, it's the reality of what's happened. Even when you go back to like financial crisis, dot-com bubble, COVID, you're like, valuation, where's numbers? Throw out the next 2-3 quarters. What could numbers be over the next, 1-2 years? Here, it's systemic. It's a structural thing that's happening to U.S. tech. That's why I've been so outspoken in terms of what's happened.
All right. So what do you say to somebody? You just said that you've been bullish for 25 years. I would paint that as like, I know that you're very optimistic about what tech can do. Obviously what it's done for our country. If you think about some of the most successful companies in the world were created here. Some of the best technology or technological innovation has happened here, right? And so if you think about your knowledge of just all the manufacturing and the supply chain, reliance by these companies on Asia, what would you say to folks that say, Dan, why weren't you discounting this ahead of this sort of crisis. We had a little bit of a preview with COVID and what that could mean for the disruption of our companies, but also from a national security standpoint, right?
Sure.
And so I'm just curious, and I just want to, I'm laying that out there because I think that is a legitimate concern, you know what I mean, of your work.
I mean, Apple has more infrastructure in China today than they did 4 or 5 years ago. The reality is that the nature of the way the global supply chain work, it's ultimately we want the products, they're made in Asia. And that's just, and are there issues in terms of like China and national security and some of that's seen IP issues? Of course. Do things have to be worked out? Yeah. But when you go down a path like this, the destruction and the self-fulfilling prophecy, I believe it's why like stocks are selling off the way they are. Because I can tell you from an investor perspective, I did a call last night with 300 Asian investors. The point is that people don't understand what this is doing in terms of destruction of pure demand. You know what I'm saying? And once that starts, you can't all of a sudden be like, deal, Mark. No, we're talking about things that are already set in motion, CapEx project. And then to that point, it's like our view, like the reason we haven't downgraded any tech stock, it's the view like this thing gets resolved with China in the next 30 days, 45 days, 60 days.
You think that? Oh,
no, but
okay.
If it's not, it's all bets off.
Right.
I mean that, and
but do you care? Like, do the investors that you talk about? They don't give a shit what your rating is on these stocks, do they? Really? You know what I mean?
But I'm trying to explain to you.
Yeah.
If I felt that this current situation was going to be 6 months, 9 months,
you'd have to step aside on everything.
You'd have to downgrade everything, and that's why I think like most of what I'm talking about with investors, like okay, stress test, worst case, Microsoft, where could numbers be? How much could they cut spending? What could EBITDA be? Go back to other valuations over the last 15, 20 years. Where could they ultimately, if you look at 26 numbers. Apple. Look, Apple's one, like 93% iPhones are built in China. You could be like, some sort of pie in the sky. India could be, 3% iPhones? I mean, let's just, remember, I just want to talk like not fairy tale Pinocchio stuff. Facts, reality. And that's why part of this whole week has been getting the message out, half as an analyst to our clients, half as a U.S. citizen to explain what's really happening and the reality of seeing something in the Beltway. And next thing you know, a U.S. American sees 30, 40% increase in the average things they're buying. And then they're like, what? No, but we have to make it here. I'm like, no, that's a fairy tale.
Do you think it's interesting in the lead up to these tariffs, there was so much emphasis. So we had the steel tariffs and then we had the auto tariffs and, they were with Canada and they were with Mexico and they were with the EU. And you could have literally just been really, blinders on and not even thinking about the impact on large tech, right? In the lead up to it. And do you think that was something that was pervasive among investors, let's call it in January and February?
15, 20% reciprocal tariffs, that's what you were expecting. You weren't expecting a chart that if I was in junior high and showed it to an economics teacher, they'd laugh and say, Dan, sit down. Come on, this chart. This is a trade deficit converted into some Goodwill Hunting lab chalkboard like thing experiment that's not reality. So I think that it comes down to like it'll be known, and Siegel's talked about and others, like the worst policy mistake in 100 years. And the reality is that I think now from an investor perspective, you don't know rules of the game. You don't know where and I could tell you from a lot of companies that I'm talking to, they don't know their input. So I'll just give you an example. Let's say I'm a CIO and I'm buying $100,000 of software with racks and servers, and I ordered it 2 months ago, $100,000. Now all of a sudden I'm looking, like, hold on a second. That rack, if I look through Dell, through NetApp, where's that coming from? Is that 100,000? Do I all of a sudden then get hit with another 100,000 that ultimately is a tariff that I'm paying. They're not paying it. So I think that's the reality. And that's why, like, I stress that, and again, we lowered our rating and we lowered numbers today from Microsoft. It's trying to explain to the investor, like, hey, it's not just about no guidance. You don't understand. Number cuts are going to be something that are not being factored into the extent in these stocks.
Let me ask you this as an analyst, and I get frustrated with strategists, right? So they'll lower their S&P target from 6,100 to 5,700, and they're not ratcheting down S&P earnings numbers, right?
No.
So do you do that with some of your work?
You have to lower.
All right, so it's always attached to.
I mean,
changes.
Sometimes you'll lower, and there's times like you could raise or lower based on a multiple, or if something happens and you think things have changed. But the reality is, it's really ultimately a lot of times I think like you have to do it along with numbers eventually. Because,
a multiple, because you use a multiple versus a price, but there needs to be some other input, one other input.
Or if it's something like there's a technology innovation, like if you think about like, in terms of AI and the multiple, and let's say 30% of a company is now AI or cloud, you'll pay more of a multiple for that, like some of the parts. So like there's things like that. But I think, especially when we're talking like what's happening here, it's trying to basically stress test and understand where the numbers go.
Yeah.
Like that's the reality in terms of like everything that we're trying to figure out. And I'm always the one that's like, me and you have talked for many years, like, the quarter, this, it's you look through it, this is different because it's structural to the whole business models of tech. So you can't just look at it and be like, oh, it's fine, they're going to get through it. That's a rose-colored glass, I think, wrong way to view it.
Yeah, so there are two camps right now. There's the folks, and we just saw this play out over the last couple of days. You have these guys like Ackman, and you have, some of these guys like David Sachs, and, they're taking victory laps on Wednesdays sort of thing. And I'm like, guys, I'm not saying this, I don't like either one of those guys. And I think they're literally, it's like, I don't, there's so much intellectual dishonesty that's going on in and around this.
And especially if you look on the weekend, on social media, it was at points that was like stunning, like to your point, like in terms of just some of the stuff going on in social media. There's so many retail investors, like so many tens of millions that are new since COVID, and they're coming in and they're reading things like, oh, this is done, this is good, no, this is going to be good for U.S. I'm like, no, you're like McFly, no.
Well, it goes back to what you were just saying is like, if you were Apple, you make 95% of your iPhones over there. Tim Cook has spent 40 years of his life, or 35, basically creating the infrastructure that has that manufacturing capability over there at low at low cost,
Foxconn,
and orienting the entire, supply chain, right? To do this, people, when you order your iPhone on September 20th and it's delivered to you on September 27th, you can look at the FedEx tracking thing and it left Shangzhou or some shit like that, 3 days earlier, and it's sitting at your doorstep, you know what I mean? Like, that is the brilliance of Apple, right? That's why
and it is the brilliance of we wouldn't talk AI revolution. Look what NVIDIA and Jensen did in terms of like with their chips.
Right.
Where are those chips produced? Ohio? So the reality is these companies can't all of a sudden be like, oh, you know what? Nathan Ives, they open up that new fab in North Carolina. Let's call them. And instead of buying from Taiwan, we're going to call from them. There's only one problem. That doesn't exist. And it'll take 4 to 5 years to build. Yeah. And then when you build it, it will be 15x more expensive.
And robots are going to be putting this stuff together.
And then it goes to that whole thing. And that's why, but yeah, it speaks to why, like, I've been so outspoken this week trying to explain, not just from an investor perspective, but to the average U.S. citizen.
Yeah.
What's coming.
All right, let's go back. I want to go to 2021. We have this period that kind of was post all of this sort of stuff that we're talking about, like a breakdown in supply chains, lack of demand, right? And then that turned on a dime, right? From 2020 to 2021. And, valuations got crazy, unprofitable tech IPOs, SPACs, crypto, all this sort of stuff. And then all of a sudden, the Fed comes to this conclusion that inflation is a problem. They signal they're going to start raising interest rates off of a zero interest rate bound. And all of the most expensive speculative stuff in the market gets hit really hard in 2022. I think the NASDAQ closed down more than 30%. The S&P closed down 20-some percent, but it felt very orderly. Right? So interest rates went like this, stair step. Stocks, it was orderly, right? You took a lot of froth out of the market. So my question first is that in that sort of period, in that sort of sell-off, were you able to maintain your general bullish view?
100%.
Okay. It felt normal to you.
It felt normal to me. This feels not just not feel normal. This is crazy. I mean, I'm talking like, it's like in investors, like every time I shut my phone off, put it back on, 10 voicemails.
Right.
Wake up in the morning, 40 missed calls. Because the reality is that this is totally different. Because to your point, going to that example, was the government trying to basically burn that whole thing down? And then to the second time, what's the alternative? That's like you being in the ocean. I flip your boat in the middle of the ocean, no life raft, and I'll be like, oh, when you get back to shore, we'll hang out. That's kind of big tech right now. And look, no CEOs have spoken out because I think they're trying to figure out behind the scenes what they do, as well as also like this is.
Well, they fear retribution,
and they fear and that and that speaks to the whole like from an investor perspective, like how do you play it? Does Apple get an exemption?
We'll get to that in a couple minutes. But then I want to say, okay, so I think that you were one of the first sell-side analysts in late 22 or definitely early 23, because you and I think we did a pod back then.
Yeah, I remember that, yeah.
Who really put a flag in the ground and said this generative AI is going to infect every part of the tech market, and there's probably another leg beyond that. So that was your trade, or that was your view. You got very right. You were very right in 23. You were very right in 24. We had those two massive years. And so just give me a sense of like the mindset
what there. What makes me very sad, not even as an analyst, it's the first time that I've felt in my whole career that U.S. was ahead of China in tech. For so many years, I go to China and I come back and go to Silicon Valley. I'm like, oh, they're just, whether it was like, on the auto side, whether it was on disruptive tech, whether it was on chips. And AI was the first time like we own it. No, I'm saying like from NVIDIA and Microsoft to Palantir to autonomous. And the reality is that what this is doing, it's like a Jenga puzzle, and you're just, and that, and many companies that I talk to, and many buyers, they're recognizing that over the last week.
All right, so let's flash forward. So it's the end of 2024. We're coming into this year, two bang up years. It's really hard to find anybody who wants to fade the generative AI trade. Okay, whether it was NVIDIA, whether it was the hyperscalers, whether it was some of these application companies.
$325 billion
right,
CapEx.
and that was confirmed.
DeepSeek comes out.
All right, so the DeepSeek, we'll get to that in a second. But to me and Guy, we're sitting here, we do podcasts every day. We do Fast Money every day. And we're saying, and people are looking at us like we have three fucking heads. We're saying, listen, the pace of this CapEx cannot continue, right? Because if the idea was, just kind of run fast, break things, you know what I mean? Don't ask for permission, ask for forgiveness. We know how that ends. I mean, like I've been doing this as long as you have. I know how it ends. And so I was early, and I'm not going to speak for Guy, but I laid out how this ends. And, we got to DeepSeek. NVIDIA was the largest market cap company in the world, $3.4 trillion in market cap. It sold off 17%. But then the analyst community, and I'm not going to even speak because I don't really remember where you were in this, they got very convinced very quickly, oh, this is good for NVIDIA, okay? All right, so give me your 411 on that.
So look, like DeepSeek, add 2 commas to what they spent on 6 million.
Fine. But it's still
No.
like 2 commas less than
But
what
what I'm
we
saying
spent
is
over
like,
here.
and they buy 34,000 next-gen NVIDIA hardware and all the stuff that happened when I was in Singapore that came out. My view of DeepSeek is like, it's a model. As the models get cheaper, that's ultimately bullish for AI. Because when it all comes down, like
Faster
use
adoption,
cases,
more, yeah.
But I feel like what it did was it created a shadow and a ghost where it's like, dude, Chinese, like they're like MacGyver in like a closet, 2 sticks, a toothpick, a seltzer can. They just created this. Oh my God. And you can't fight that ghost because it's there. And I think when it came to the CapEx would definitely slow if you think about the next few years, 325, and then does it go to 400?
Growth rate was decelerating
the growth rate
massively.
was decelerating.
Yeah.
But our bull case is like, it's about use cases because we see it like it's the software use case, what's happening on enterprise, on the consumer side, it's autonomous, it's robotics. You could have been wrong about some names and the pace, 100%. And right now, we'd be sitting here being like, okay, what's NVIDIA baking in relative to next year? You'd be like, I think it's worth 110. I'm like, dude, I think it's worth 180. You bet. No, me and you have talked for years.
Yeah.
But it's all done. No, I'm saying like that whole game is over because basically what's happened here, it's like the Jenga puzzle. So now you have to almost like put it back together because so much CapEx is going to be slowed down.
But see, that was the thing though, man. Like, so a week after DeepSeek, all of a sudden, or days after, you start having all the hyperscalers report. They're trading at all-time highs. They're trading, even, Google was trading at a multiple higher than where it had been over the last couple years when we had this bang-up 2 years in the market. And they show a slight decel in revenue growth, and they all stick to or raise their CapEx. And that was it. And part of the issue, and I've been bringing this up, and listen, I am not talking to suppliers in Vietnam and China. And
no, but someone has been in the market for decades.
But for me, I'm like, I don't see the use cases. I don't see them materializing. And all those things that you just mentioned, I said it on Fast Money on our pods every night. I'll take the over. Whenever you think that's happening, I'll take the over. And so when you think about it, the market's a discounting mechanism, right? At some point, you go from a bubble in sentiment, in my opinion, right, to like the other side of that, right? And then if you overshot to the upside, then you can clearly overshoot to the downside. And you cover all these stocks. But in 2022, when we just talked about that orderly sell-off in the market, and it did feel orderly, except a handful of the stocks in your coverage. Tesla, NVIDIA, Netflix, and Meta. They sold off 70%. Now they're up 10x from there, from the lows. But a lot of people, and this is what we try to do here, a lot of people make horrible decisions at tops. No one knows it's a top. And they make horrible decisions at bottoms.
No.
So that's what we try to do. You deal with an institutional client.
And retail. We have a big...
Yeah. So and listen, I believe that you do great work, and I believe that you're trying to speak to a broad audience, right?
Yep.
And you do it on TV. You do it with both your retail and investing client. But what do you think it was that it just infected this kind of mindset among investors where they just couldn't see it on any other way? And I'll just tell you, as we get closer to Amazon, Google, Meta, Microsoft, NVIDIA is obviously a month after, Tesla's a disaster. We'll talk about that. I think the margin for error, man, is really, really small.
But I don't even know, how to even think about it, because the reality is no one's giving guidance.
Yeah.
No,
Are you already getting a sense for that from companies?
No
They're going to tell you that
no
pull
one's no guy. Like literally, I will be shocked if any tech company that has any decent gives guy. And I think already, like I can tell you from an investor perspective, you're basically the June quarter, it's over. No one, like everyone's like, it's a toss out. September is probably a toss. And people could agree or disagree, but I'm saying this, I'm just telling you like how many of you, and everyone's like, okay, if there's some normalization, what does 2026 numbers look like? That's how I'm going to value it. You know what I'm saying? My conversations is I'm like, June, where do you think? It's like, It's done.
All right, so I want to take it from the micro to the macro. If you feel that way about, let's say, 20 stocks in your coverage, is that fair to say? These are 20 of the probably, biggest contributors to S&P 500 earnings. Coming into this year, I think the estimate was still for 13% year-over-year growth. I just checked FactSet's Earning Insight, and I think they have it at about 7% now. So strategists are bringing that down. If these companies can't guide for Q2, and let's just say there's a really good chance.
And they won't guide for the year.
Yeah, right. Let's just say there was a really good chance that Q1 already fell into, recessionary sort of stuff. And then
I
we
don't
have
think
it for
that.
Q2. You don't.
Yeah, no. So I don't believe that. I think Q1, the actual quarters will be actually pretty good. And then it's just.
Yeah. All right. So then how does your group act in a recession that we're not going to know it's a recession until after it's been declared, but they're going to try, investors are going to sniff it out, I guess.
But then then you have to break it out to the tariff. And I just keep going.
But there's no mulligans in markets. Like that's the one thing that I think is really important is okay, I would say to any C-level executive of a Fortune 100 company, I'd say you got a mulligan right here. You know what I mean?
No, of course.
You could even, you don't want to kitchen sink it because you don't want sentiment that's really negative just to puke things out.
And as you
got to be careful.
And it's always like how many times, you'll be in morning meetings over the years, I think it's baked in.
Right.
And then next day, down 20%.
Right.
Well, it actually wasn't baked in.
Yeah, but I mean, listen, people want to believe, they want to be optimistic. I think market participants, there's such a small percentage of those who are thinking what could go wrong rather than what could go right. Guy and I are the what could go wrong guys, but that's because we're cynical.
But that's also what makes a market.
Yeah.
A lot of times I love talking to people that disagree with me because I think you get a much better sense of you need to understand.
You have to understand the flip side of the trade. One thing, and we'll get to some single names. We'll kind of drill down a little bit. I'm in the mindset right now is that there's very few announcements that could come out of the administration. We just had one yesterday on Wednesday that they basically pushed out for 90 days, something that they instituted a week earlier. And to me, it's like a net. It just didn't matter. Now
it's just because the bond market basically called their bluff.
Yes. Yeah. And now, if you look at it week over week, the situation with China, and I think you'd agree with me, is much worse, actually, if you think about it. So, for instance...
As well as also, last time I checked, China doesn't have midterm elections. They play things over 100 years, not 1 year.
Yeah. Before we get to the question I was just going to ask, are you seeing among party lines a level of defensiveness about the policy and what it means for the stock market?
I see that maybe on retail rather than institutional.
Well, what about Ackman? I mean, Ackman was a supporter, and then he got all crazy over the weekend, and then he got back to being a sycophant. You know what I mean?
But I think if you look ultimately, to me, it's almost if I just sat here in New York City or San Fran or Marin or wherever, Florida, and basically just viewed things out of my little bubble, to be honest, I'd be more bullish because I wouldn't it's almost I talk to other people in the financial community. You're okay, market's going to work itself out. For the long term, there's a game of poker.
Yeah.
And fortunately, by traveling around the world my whole life, you talk to so many people from around the world, so many people in the supply chain, so many companies, and the more you talk to them over the last week, and especially this weekend, that's what makes you the most negative.
So as negative as you are, part of it has to do with the fact that all of a sudden, all these kind of outward sort of partners, you know what I mean? Whether they're allies or adversaries, they're looking at what's going on and they've gotten considerably negative. They've gotten very negative about what's going on here. And you can't turn that on a dime, right? Because we've lost confidence by those folks, you know what I mean? In the way in which we've done business for 40 years.
But the other thing being, when companies report earnings, it's companies that spend money, software. If those CapEx purchases and slow hiring, cautious, what do you think that does?
2 months ago, and I'm just going to hold your feet to the fire, and I don't know, and you tell me if I'm wrong, but 2 months ago,
you're wrong.
If we were having this conversation and I said to you, the likelihood in a difficult sort of environment, like economic environment, not this, you know what I mean? Just kind of slowing growth.
Totally.
And this, if you thought that there is a chance that the hyperscalers would pull back on those CapEx, numbers
And
that
I'd
they
say
gave.
no.
That's what. All right. So
no,
that
Dan, I would
you
tell
say
you
no fucking way.
Dan, I would tell you like, no, impossible way. And I'm like, ironclad cement done this.
All right. So I mean, that was kind of my view, because we're sitting there, Guy and I, and be scratching our heads. Why is this supposed sanctity of these CapEx numbers?
But they were never going to change.
All right. But the argument that I was making is that in 2022, when, you know what changes? When your stock starts careening lower, right? That's one thing. And then you start seeing, some of your, customers kind of pulling back and pushing out, this and that or whatever. And, in 2022, when Meta, which was a darling story.
Like that 3Q quarter.
Correct. When they basically, the year of rationalization, and they started firing people. That was the bottom. So if you had that playbook from 2022 and you're Meta, and you were kind of the darling of this, or the outperformer of this last, call it 6 to 9 months or even longer, the idea of pulling back on $25 billion on CapEx, it was all bullshit anyway. It's not like they were writing checks right there and now, you know what I mean? Like, so to me, that was just an easy one.
But I think here, and I totally understand like that comparison. That's a good comparison, 22 to now. The difference now is like, it's almost like the whole system has been turned upside down. And you see it from
by the policy, you're saying, just in the last month.
And you see it, whether it's like the dollar, gold, oil, whether it was like we were on some black swan event before 10-year, and maybe diamond, basically you had Trump basically take, away from the cliff. And I think, but here's the thing. Guess who's caught in the middle? Guess who's caught in the storm? Companies.
Yeah. Well, they're the ones.
No,
they're paying the tariff. They're paying the tax. And they have to pass it through or eat it on their margin. It's that simple.
It's that simple.
And here, one thing is interesting. So CPI came out this morning, and it wasn't, it was like cooler than expected, right? And no one cared, because if you look at the reasons why it was cooler, it was less spending on consumer electronics, less spending on airfare, less spending on like a whole host of consumer things.
But then that would be like that number would be like looking at your car in a picture, but yet since then you've already crashed it and now it's in the shop. Like, it's almost like.
All right, but we had Tom Lee about a month ago on the pod from Fundstrat. I know you know Tom. And he does really great work, and he's really transparent, He said to Guy and me, and I thought this was interesting because I hadn't heard anyone say this in this environment. I want to say this was probably early March is my guess. And he said tariffs will, and no one knew back then what the tariff situation was going to be, but he said tariffs will actually be deflationary because it will have consumers pull back.
But but the thing is that if this whole thing was done the right way, if this was done in a orderly, not chaotic way, then it's like negotiate 15-20%, you get better deals. Like you said, it becomes deflationary, it raised the price, more efficiency. Yeah. But essentially what happens is like you've almost like broke, at least in the near term, the system to try to, it's almost like you burnt your house down to meet the firefighters.
I like that. I've heard that a little bit.
No,
this
but
week.
no.
Well, I've heard the other analogy is like Trump lit the fire and then shows up with a fire truck, sort of thing.
But guess who's in the house? Yeah. It's American consumers and it's American companies that ultimately suffer, and that's why in Beijing, it keeps going back to like I could tell you, like in Asia, it was always like ABC, anything but China. Like when you're in like sovereign funds, you're throughout Hong Kong. Then all of a sudden, but why was the reason you couldn't invest in China? The main reason you weren't in the
policy, right?
You weren't in the party.
Yeah.
You didn't know over a weekend. Now that's U.S. So that's part of the problem is that like, and I see so many international funds that I talk to. Where's money gone? Europe, China. In terms of those markets.
Yeah, and money, not just stocks, but like, buns and gilts and Swiss franc. And all right, I'm going to run through, I love that conversation, by the way. And I love the fact that I know that you don't mind being called out when you think you get something wrong, whether it's a narrative, whether it's an individual name. And
100%.
but I appreciate that. And my job is to push back on it. By the way, I'm wrong all the fucking time. Okay. So like,
But but like, that's also why, like, in this situation, I easily I could have taken the approach as everything started a week ago. Once they did the chart that live in that infamy, I could have been like, it's going to be negotiated. It's just near-term weakness. It's not structural. These are our names. You buy groundhog, same thing.
Yeah.
But that's not how we do it. People have known us. We talk the way we see it. And the reality is the world changed once they did that.
All right, let's run through a handful of names here. I think these are widely held names that people care about. They're also some of the biggest ones. All right, let's hit NVDA really quickly here. I think it's down like 35% from those recent highs. It's down about 20% on the year. Obviously, it had a huge year last year, okay? It was up 180% or something like that. It represented 25% of the S&P 500's 25% gains. Right now, consensus for earnings and for sales growth for the current fiscal year 2026 is basically, let's call it 57% for both. It trades at 23.5 times earnings.
And numbers are coming down at least 10%.
Well, all right, that's what I'm going to get to. All right, and it's trading at 13 times sales. It looks even cheaper for 2027. 23% expected earnings and sales growth, trading at 19 times and 10.5 times sales. All right. No one is willing to commit to right now. Most of the people that I read, that I talk to, they still think that actually numbers could be too low. Yeah. All right, you saw Taiwan Semi's results this morning, and it probably has a lot to do with the fact of people trying to do stuff before tariffs. Let's talk about NVIDIA right here. Where do you think numbers go, and where's
numbers
the
come down
multiple?
10 to 12%.
Yeah.
I mean,
is that the way you're thinking about it across the board? For,
I think
your mega
like,
cap structure.
I think mega cap. I'm thinking like 10 to 12%. Some could be 15%. Some of the software, cybersecurity, 5 to 7, 8%. Because also those are ARR models and some of those. But that, to me, like, that's sort of the way to, as a baseline, that's the way to be. So like if someone says like because look, NVIDIA, the whole thing was like, now let's call it maybe like they had so much upside in terms of pipeline, everything. So relative, like, they might not be as impact because they were just a beat and raise, even though
but China's a problem. Last year, China was basically 13% of their sales, and it was $17 billion or something like that. And these H20s, which are shitty chips relative to what anything's out there. Supposedly, there's
Jensen's not going to Mar-a-Lago in a weekend if things are.
But that's so bullshit. That's the point. Is if Jensen goes and he bends the knee and he gets some sort of exclusion.
It's
not like mob boss shit.
But
man.
It's not changing.
Yeah.
Because, okay, you could talk about some of the exemptions or whatever, but their customers have slowed down and stopped.
Correct.
You know what I'm saying? It doesn't.
I get it.
And that's the thing. It's not about like exemption. That's one part of it. But it's about their customers slowing things down.
Right. All right. So just in NVIDIA really quickly, the high intraday in January is $153. Right now it's trading at $108.
I mean,
the April 2024 low, okay, was basically, I'm looking at this, as $76. That would be a 50% decline from those recent highs. I think it's going there. And
our view is, what we keep telling everyone is 80 and 90 is the table pound area.
Okay. That's helpful.
Till it gets there.
So if earnings are going to come down, let's call it 12% on the high end, right? You know what I mean? So you're getting to a point where at $80, then it's just it's trading literally at 15 times or something like that.
So what we're doing is we're giving people levels.
Yeah. No, that makes sense.
Based on, because
I'd buy it at $80. No, how's that? Okay.
Because also you can't just sit here and be like, I don't know. Yeah, I like it.
I'd buy it at $75.
Exactly. Okay. But that's where I see that one.
All right. I got that. All right. Let's do Apple really quickly. We kind of laid out the issues there. They had an exemption in the trade war back in 18 and 19. Tim Cook has already said they're going to spend $500 billion over the next 4 years. It seemed kind of cynical to me in many ways. I hate those next 4 years sort of thing. Dear leader, you know what I mean? That sort of thing. We know that what are they going to build here? What are
AI
they going to build?
servers,
Okay,
some
fine. They're going to build their own.
high-end
Why would a company like Apple, when they know the cost of compute is, why would you go and create that sort of infrastructure?
So you get a Hallmark card from Trump on the exemption.
But they're never going to do it. Okay,
Of
like
course.
in my opinion. Okay, so Apple has totally fucked up Apple Intelligence. They basically have no strategy other than your iPhone lights up with a freaking rainbow every time you do a search. That's Apple Intelligence. Okay. What do you do with this one? I mean, like seriously, this is trading at 30 times still.
Yeah, but to me, Apple is one where the reason that remains like a name that like I would just
26
like
times, by the way. Okay, in the last week, it's come in
but
like 4
but
turns.
that's one because of the free cash flow and because remember we're going on almost like you're gonna now start to basically look at like over the next year what free cash flow and earnings could look like. iPhone 17 in theory, that's going to be from an Apple Intelligence perspective. What's going to ultimately
they just pushed out
but,
indefinitely Apple Intelligence, so there's no reason to upgrade your iPhone.
I can't. But look, I like because of the tariffs, it's almost like you're now. Like we tried to we basically took a stab when we cut numbers by 11%, and we basically said, okay, if you cut numbers by 11%, like where could the stock go? Like, is it like 240, 250, 260, like if it goes below 2, you're trying to basically find levels, and that's sort of how we're navigating Apple here.
All right, so Apple has, in my opinion, 2 issues because I think it will be the last battle fought in this trade war.
Well, it's in the eye of this. No company is more
Tesla,
impacted.
other than Tesla-ish.
No, but I think Apple is much more.
All right, well, I agree with that. Well, we'll get to Tesla.
and
I think there's some similarities because I think nationalistic tendencies are going to take over.
And when you have retaliatory, who are the 2 companies? It's
Correct.
Apple and Tesla, BYD over Tesla and Huawei over Apple.
Yes, 100%. And that's a theme that's been building for a few years now because of to what you said, the innovation there relative to here. Teslas and iPhones have been evolutionary, and what BYD and Huawei has been able to do with their own tech has kind of been revolutionary over the last couple of years. You agree with that?
No, of course I agree with that. But what I also would tell you is that going back to the whole U.S.-China, that narrative in a twilight zone has been accelerated by our government.
Right.
No,
I get it. But here's the other thing. Even in this environment, iPhones, which I believe are discretionary if you're upgrading every year, not if you're upgrading every 3 years.
And then you have a recessionary environment. People,
correct. So that's what I mean from a discretionary. Teslas, even with the credits, are more expensive than most cars.
And the cost too, because iPhones, they're going to be $2,200.
Yeah. All right. So where does Apple become a table pounder to you? It's trading $190. It's down from $260.
We basically said like below 170 is where you like really start to be aggressive.
And 170, by the way, is the 52-week low. Not too different than what we saw. We just talked about NVIDIA down there at 170. You would have a 35% peak to trough decline. But again, this is not a point. You're not going to be able to pinpoint any of it.
No, you're not going to pay. Yeah. But we're just trying to be like, would I own Apple today at this level for the next year, assuming that the near term? Yeah.
Okay.
But you're trying to give people. The main thing now is like, it's not just about like base case. We have base case price target. You're trying to give people levels where it's like, in this volatile market, if stocks get to this level, they become, I wouldn't say generational, but they become the levels.
That's fine. I mean, I believe that these are going to be the companies that lead us out, whatever malaise that we're in.
Exactly.
Maybe 1 or 2 fall by the wayside. Maybe it's like a Broadcom, which the ASIC thing got way overexcited last year into this year, and that sort of thing. Microsoft is interesting to me. Early beneficiary of the kind of hyperscaler build out relationship with OpenAI. It was always trading at a bit of a premium to a bunch of the other Mag7.
And we just lowered price target on Apple.
Okay, on Microsoft. So that stock made its all-time high in the first half of 24. And at some point, I think people sniffed out the fact that the OpenAI relationship wasn't nearly as impactful as they thought. That said, they didn't actually spend a lot for it. But as it was fraying, they continued to build out their cloud infrastructure, and maybe they were going to find a whole host of other, customers.
And enterprise, they're going to be the one that disproportionately benefits.
Correct.
Yeah.
But the stock, interestingly, while it topped out on a relative basis, really sucked versus a lot of the other ones over the last year. It's only down 22% from those all-time highs made mid last year. Make a case. you just took down numbers. Is there a scenario where this one acts better on the way
I
out?
think this one acts much better than NVIDIA and Apple because of even though you have some CapEx and stuff, it's because of the tariff exposure, and that's the one because of where they play on the software. But I actually view it as actually more of like a defense. Like I view like them, Oracle, IBM. Like we've been telling our clients, like, you sell semis or whatever, you want to light them in semis, you go to software. You in cybersecurity, like I feel like cybersecurity software, those are gonna be the defensive sectors. I think Microsoft, that's one that sticks out.
All right, let's talk about Google for a second here. Here's one that since the launch of Bard like 2 years ago, it's just been in the penalty box, a bunch of disasters. Gemini, I think it is, forget valuation. We know it's cheap. Maybe it's cheap for a reason. That ultimately, if they can ever get Gemini right across their platforms, and they have 7 that have over 1 billion users, they have 3 with over 3 billion, that sort of thing, there's probably some upside there, except for the fact the headwinds to their search business because of, so talk to me a little bit, the push and pull there, and where are you right now on Google?
Yeah. I mean, like, look, some of the parts, that's one where, like, if they just find lightning in a bottle in like one of 3 areas, it changes the game.
Are you worried about their search business?
I'm not worried. I'd say like you think about it, but it's not one like I think near term that it's a huge worry in the business. I think longer term, if they don't get their act together, then it does become a worry.
All right, let's talk about Meta, because this is one, and we talked about it. The spend from the metaverse was the thing that sent the stock down 70% in 2022. They rationalized costs. They rejiggered things. They took some of the expense that they were spending on metaverse. They rejiggered it towards Meta AI. They were considered a beneficiary because they were serving better ads, monetizing it better. They didn't build out the cloud infrastructure, right, of the hyperscalers. Where are you now? This is the best acting on a relative basis, down 7%.
That's another like defensive, not tariff exposed.
You're not worried about the valuation, anything like that.
You could have like digital advertising. You could definitely have some softness there, right? In terms of just given what happens in terms of overall spending environment. But that's not. It's almost like when we break these out, Microsoft, Meta are much more defensible than an Apple and NVIDIA relative to where we are.
Any quick thoughts on Llama? They just rolled out Llama 4.
They're a year behind. I mean, look,
but they're not, like, from a consumer standpoint. I mean, they have like 3.5 billion monthly actives, and they have that little circle in there, and no one's using that.
When you go into the technology,
it's not great.
It's not great. I mean, the point is like this is a very important that they start to.
You think they get it right or no?
I think it's going to be tough for them to fully. I mean, like if you look at just like ChatGPT and where everything's headed, it's like that kind of open source, closed sources.
Yeah. All right, let's talk Amazon. Okay, so there's an AWS component. There is the fact that they've been building a model, but they've been investing in Anthropic, and they've been using Claude and all that sort of stuff. And I think that Amazon obviously, has been the clear winner in the cloud space, except that Microsoft's caught up a lot of share. Amazon was in the penalty box. I want to go back to early 24, 23 because of the decelerating growth in AWS.
It also felt like they were nowhere in AWS.
So this is one where it feels like retail, the retail business could be a problem in this environment, and then AWS and maybe it just gets stuck a little bit. You're going to see less demand for compute, and they don't have a model that's that differentiated or anything like that. How are you feeling about Amazon?
I mean, you brought up. I mean, I think Meta and Microsoft are better positioned than Amazon because of the consumer piece. I do think on cloud, it's pretty resilient, so that's a defensive area. And the advertising piece and some of the parts could give you, I think, upside that's probably not factored in here. But I like it. I mean, outside just the consumer, and Jassy talked about 10 CNBC, like outside of just the consumer exposure, and that's going to be one that it's going to be volatile as that plays out.
You'd rather own Walmart, I'm assuming. I know you don't cover Walmart, but
no, I mean, I just think I'd rather own Amazon just because of the AWS piece. But it's almost like
that's optionality, is what you're saying.
But it's almost like AWS becomes almost, it goes from an asset to to some extent a little bit of a negative, just given some of the spending
All
environment.
right, last one, the big kahuna is Tesla. I mean, I'm just going to be really frank. Anyone who listens to this podcast, watches Fast
I
Money.
mean, you've talked about it for
I hate it. I think the fundamentals are so bad. I think it's one of the worst mega cap fundamentals, and it's been that way for actually 3.5 years. They've been in this trade war. I think Elon has made some really, forget about his behavior over the last 1.5 years. I think the price war and what he thought about how, this elasticity sort of situation, he's been dead wrong. He's been dead wrong about, things like hybrid. If you think about BYD in China, they only make full electronic and BEVs, okay? So battery operated. Mm-hmm. And they have just basically overtaken Tesla in deliveries. They have far more cars. They refresh them quicker. They're cheaper. They have higher ranges, and they charge much faster. And they're going to be subsidized by the government for the most part.
Look, the reality is, being bullish Tesla for decades, mm-hmm. but we've talked about it. Our biggest frustration. You've talked about it for a long time. For me, it's just really more about the brand issue, what he's done. I think
that's something that's been building for you for a couple of years.
I think it's 20% permanent destruction in Europe.
Most of your peers basically, though, think it's mid-single digits at best, like brand destruction.
And remember,
as demand.
I've been probably the big, Jonas, the biggest support. But I'm telling you right now, in Europe, the brand destruction's real. In U.S., the brand destruction has been small and growing. And my whole thing is that you talk about self-created, I just continue to say he needs to leave the government, because the longer he stays there, the brand destruction continues to increase. See, the difference with me and you is that I'm more bullish on the view of when it comes to AI, I believe the holy grail is physical AI. Mm-hmm. That's so when it comes
full self-driving, robotaxi, and Optimus, they're all built on
physical. Yeah. So but it goes back to NVIDIA. You talk about use cases, you haven't seen them. I think the holy grail for AI, and you've talked about it for even a few years. It's about autonomous and robotics. Now, if you weren't bullish on autonomous and robotics,
you should not own this stock.
You wouldn't own this stock.
Right.
So to me, that's 90% of the value.
But that's the thing I just take issue with is there's gravity in markets, right? You know that, right? And so ultimately, when the rubber hits the road, in an environment like this is a great example, is I'm taking the over on robotaxi and robotics. Why? Last year, when they've held events for these, robotaxi was a 2-seated cab. Are you kidding me? No one would call up. It actually goes against what you're thinking about is an alternative to, you know what I mean, driving a car.
Can I ask you a question?
Yeah.
Will you ever, so let's say it's 2 years from now.
Yeah.
Would you ever take a ride in a robotaxi or cyber?
I've been in Waymos. I love them.
Yeah, exactly.
It's amazing. I would probably not from a brand perspective, because if Waymo is going to be, competing with,
but Waymo are $240,000 cars that can't scale.
I agree with that, by the way, because I've been in those Jaguars and all the LiDAR equipment.
And they're only in 4 cities.
But I want to take the over in when his vision of robotaxi based on cameras and AI powered this and that or whatever. I just don't think that's happening anytime soon.
Let me say, if unsupervised FSD hits in Austin in June, would that change your view?
It's not hitting there. I'll just, you know what I mean? That June event is going to get pushed out to October like it did last summer, right? I'm just telling you. No, and he's sitting in the White House. And he made that bet because he thought that he could get rid of the regulation that's stopping full self-driving. And then that's a next step towards, Robotaxi. The other thing is you talk about, the cost about scaling Waymo. He's talking about using consumers' cars as part of the fleet for robotaxi. Yeah. That's never happening. They need depots, they need cleaning, they need charging. The list goes on and on. You think consumers are going to be doing that? You remember that company Toro where you could that thing is a zero. You know what I mean? So I guess my point is I'm discounting anything out of that guy's mouth because as long as he's been running this company, if you had done that, If you got like $1 million discounting every major, you know what I mean, thing, you would not have to work anymore. You know what I mean? So as the technology becomes that much more complicated, it's one thing to build a fully electric car from scratch. Like all the power to him. At this point, he is losing share in one of their most important markets outside of the US, which is China. I don't think they ever get that back. I think Europe could be screwed for them.
Well, China, I wouldn't say I do actually think China, this is a very important with the refresh to see these next like 3-6 months in terms of some sort of rebound there. But look, Dan, I mean, we're obviously we're bullish on Tesla in terms of the longer term. We disagree on that, but my issue has really been more the brand destruction that's self-created, and that's been huge. Because look, like when we did cuts on Tesla, it's like $2. Could it be less? You cut numbers 10-15%. You're trying to basically handicap like where you think ultimately deliveries can go.
Yeah. Well, just like Apple, I think you're going to, like, not you, but I think, they're going to basically be flattened down for the second year in a row as far as deliveries for iPhones. I think it's pretty clear based on that massive miss for Q1 deliveries that Q2 is also going to be a disaster. You know what I mean? If you just think of some of the markets where they were expecting to get back with Juniper and all this crap, it's not happening. And then the back half of the year, like, who knows? Like, they could come in at like 1.6 million deliveries.
Well, no, we went to 1.7.
Look at you.
No, but because
consensus is still like 1.9 or something, or 2, isn't it? Like, I think it is.
I'm playing in the Masters. No, I'm saying like they're not 1.9, so it's probably like 1.7.
Yeah, and listen, I'm not trying to make you too negative on anything because I think your tone. I think your tone you've set the right tone for this environment, and I think there's still going to be a lot of folks who are holding out that yesterday was a precursor to Trump. You know what I mean? Having some grand deal. He and Xi are going to meet in Saudi Arabia, and they're going to have a big handshake, and everything's going to be great. You know what I mean? That's not happening anytime soon, and if it does, all the power to him, but I just don't think the damage that's been created on the global economy and the uncertainty of us as a leader and American exceptionalism is going to be the sort of thing that leads us into this next, you know what I mean? Like,
it's the unintended consequences.
Yeah. But you know what's funny? I was saying this long before Trump ever took Musk under his wing, or vice versa, if you will, is that, Musk plays out of the Trump playbook. And, it did not end well for him in his last administration. It actually ended very badly if you think about Jan 6 and all that sort of stuff. And I actually think that Musk is going to have a similar sort of crescendo as Trump did. If it's the same playbook, you know what I mean, and the same bullshitter, like sooner or later, the bullshit catches up to you, man. It's just that simple. And you've been around this planet for as long as I have, and look at you can only push
the other problem too is that it's become a political symbol.
Yeah.
If you're anti-Doge, Musk, Trump, tariffs, that's the way that you're.
The irony is that, listen, if Musk can fix this tariff situation, you saw the battle with Navarro and everything. All right, listen, you and I could argue about. I feel like we're on the same page.
Oh no,
actually, you know what I mean? But like,
no, we're totally.
I think I'm giving you a hard time, though. Am I giving you a hard time?
Not at all. And to be honest, the reason I think you do such a good job because I watch all your stuff. You bring out conversations that are very important for the listeners, because it's like, instead of just sitting here doing the typical cookie cutter, I think it's more important than ever that people listen to things like this
25 minutes ago
because of what's going on.
You need to know, if you're bullish, you want to know the bear case, and you want to have intelligent conversations, and you
need to know levels where in this vol, where those are levels where it's like, okay, table pounder.
Well, listen, I think what you've done with a lot of your major coverage is, you could be wrong. You know what I'm saying? By lowering estimates across the board, 12% or this and whatever, you could be wrong about all that stuff. The likelihood at this point is not particularly great. You know what I mean? So you're helping, from a sentiment standpoint, you're helping to guide your, your clients.
But then 25 years, like the way that I've built my reputation with institutions around the world, it's not in good times.
Yeah.
Good times, like anyone could do. It's when times like this, when I talk about like 10, 12 hours, say whatever, it's like it's trying to navigate through storms and give some sort of flashlight in the dark alley.
Yeah. But by the way, if I'm a glass half empty sort of guy, and maybe I'm playing a persona, I'm the heel.
I don't think so, actually.
I started out.
To be honest with you, in years of being with you, it's funny. I actually kind of you say glass half empty.
Mm-hmm.
I actually think you're much more like, I wouldn't say glass half full, but like you're somewhere in the middle now versus.
You're being very generous. One thing I'll say, let's just say I go into a period.
I find you less negative than I think you've been, at least from my own view.
Yeah, I mean, listen, what I'm trying to do is figure out how this universal sentiment, whether it's bullish or bearish, could be wrong. Okay.
Totally,
And so one thing I will not do is be pressing near the lows. You know what I mean? Like, it's not, but like in 2022 in the fall, I was like, this is way overdone. You know what I mean? It felt a lot like in 2002, every rally got sold.
Dude,
the sentiment
why
was so
Why
bad.
are you bringing me back?
No, I know, but Amazon and Yahoo were like $3 stocks. You know what I mean?
I actually remember Oracle. Like, I remember like having conversations. They're like, look, $7, I won't own it, but if it goes to $6, I don't like.
I'm with you. I remember the same thing with Yahoo. So I guess my point is like, I think those 7 stocks that we just went through, 5 of them in 3 years will still be the largest market cap companies in the world. They will still be the most innovative companies in the world. And you don't even have to get all 7 of them right. You know what I mean? Like, you could go in and buy the Mag7 right now. I think in 3 years, you're going to massively outperform the market. Like, you know what I mean? So again.
And I also tell investors, don't let this volatility
Totally shake you out.
Buckle the seatbelts and understand we're gonna evolve for like a few months here. So just don't let it shake you out.
Yeah. All right. Well, I think a lot of the damage in those names has probably been done, like 2/3 of it, if you will. You know what I mean? Assuming that this is not going to be a massively protracted trade war, a massively protracted recession. We haven't had a protracted recession really since the start of this, since the early 2000s or whatever. So, again, Dan, I really appreciate you coming on, man. It was really fun. I mean, it really was the best part of my day here.
And vice versa. I was like really looking forward to it. And the fact that, obviously it's a dark time to be doing, but I think it's great. And hopefully the listeners glean some information from it.
Let's do it again really soon, Dan.
No, seriously.
All right. Thanks a lot.
Okay. Thank you.